Good afternoon. It's Tuesday, the 2nd of March, 2010, and the market's closed. We did have the market up higher today, but as you can see, late in the day, it did give back most of the gains that were, well, all of the gains that weren't due to the gap, basically. So we did finish below the daily VWAP, of course. That would put us below that, since all the trading basically occurred above where we closed. So the average price would therefore be higher. But, we are still above this 112 level. We'll look for that to be some support. The daily time frame, we've got the market's getting up towards this prior support that it broke down from near that 113 level. Didn't quite get up to it today, but still, we're still acting constructive here. But we've had 4 strong days in a row after that shakeout that occurred last Thursday morning, and it's just getting a little bit extended. There's nothing here that says that it's due to roll over, but I think a little bit further pullback, even down towards that 111.60, wouldn't be a bad thing for the market. But we'll be looking for support at 112, then 111.60, and see if the market can hold on to these gains. We've had, like I said, 4 days of a rally here. The daily time frame still kind of, from these moving averages, a little bit of a mixed picture. So maybe a pullback down towards that 50-day moving average would be a good thing. That's even down at 111.01. So, not to be looked at as a literal number, but, that's also where we have right now, at least, this rising 5-day moving average. And obviously tomorrow it'll continue at a slope like this. So I think 111.60 is going to be an important level tomorrow if we continue to pull back a little bit, and then of course that 111 area. So the S&P 500 has had a nice enjoyed 4 nice days of gains. It's come into this prior level of support that did act as resistance, and that's just a reason to look at this market and not look at it as, hey, I want to get bearish here, because obviously the trend is still higher, but tighten up the stops on your long positions, sell partials out, and that's a prudent course of action, I think, when we have the market up, like we've seen here recently. The NASDAQ 100 was up 14 cents or 0.3%, and you can see the same thing here. We're having a little bit of trouble with this prior support where we had, in this case, December 31st, kind of a little shakeout low, and then the lows of January. We've gotten up to there. We've created what's known as, I think, a gravestone doji today, meaning that here's the open and the close are the same. We traded a little bit lower during the day, but much higher. So this gravestone doji is what it's called. And if you're a candlestick fan, that's supposedly something bearish. Long before we see a gravestone doji develop, though, at the end of the day, we can see the intraday action of it breaking down. So again, I think you're better off looking at the intraday action than waiting for a candle to close to see where the market is. But in this case, we have 45 looks like an area that maybe will be tested if we continue to pull back. We've got the 10 and 50-day moving average in that location. We look at the 5-day moving average. That's also about that same level, and it's an area that nice round numbers. So we'll look to see if 45 does in fact become support if this market continues to pull back. But again, with a rising 5-day moving average, you don't want to get aggressively short in here. The Russell 2000 actually made a new intraday high today for the year. You can see it did take out those January highs, but closed 10 cents below the low of January 18th. So we did have, we've seen that this market has been leading. It ran up to, and this may be the playbook for the NASDAQ and the S&P. That is, it rallied up, pulled back to that 10 and 50-day moving average, and then, consolidated a couple days, and then was able to break through this little band of resistance, which would be equal to, this area in the S&P 500, and same thing in the NASDAQ, that we would have basically this area is the equivalent of what we've just kind of gone through in the Russell 2000. So the Russell 2000 is showing some as encouraging signs. However, the semiconductors are a reason to think that maybe we need to be just a little bit cautious on the NASDAQ overall. We've seen that this market, which has been really just kind of in a nice orderly uptrend, that it goes from one prior level of consolidation back in here, that is these prior resistance levels acting as support and resistance once again, that it's still in a nice, neat, orderly uptrend here the last several weeks. But over the last this market did, you can look at this now as we have lower highs and lower lows on the 10-minute time frame, coming down to what should be support and the location of that rising 5-day moving average. So the semiconductors are saying maybe a little bit further pullback for the NASDAQ, which wouldn't be a bad thing, and then maybe we can take on a similar type of rally that we've seen in the Russell 2000. The financials had a strong look to them early day. We've got even this one I think is even more bearish considered by the candlestick people. However, it did occur on lighter volume too. There wasn't really heavy volume in the financials, just a lot of maybe apathy, I guess, in there. But we did hold above this what's been resistance in here lately at 1470. So if we can stay above 1470 and hold that 5-day moving, even 1465-ish, I think you give it a little bit of room down to that, then the financials will, we can still consider them constructive. Overall, we're still in this big range that we've been in for the last 6-7 months. So I'm not finding the action of the financials too interesting. But if you're trading them, I think you still you look for maybe that 5-day moving average to be tested here in the next day or so. So let's take a look at the stocks that we've been involved in.